Hello, everybody. This is Noah and John, and we are from UrbanDigs. And it is Friday, so you're going to get your weekly Manhattan market report. John, there's so much stuff going on. Rates have actually came down just a little bit. There's a bear market rally going on in equities, and here we are in Manhattan real estate, and I am seeing supply break the 6,500 handle. Buyers probably thought this was never possible about 4 or 5 months ago. 65.20. Show me that chart.
That's right, Noah. So we're up another 1.5% from last week. And usually around this time is when supply peaks and starts drifting down. That's what we saw last year. If you go back to 2020, I'm sorry, rather 2019, let's pick a real year for supply. But that it peaked kind of right in June and started drifting down. So this is usually when you're seeing peak supply. But, you know, the trend right now for Manhattan supply is up and it's getting upper.
Yeah, I think seasonality is going to take a back step to macro right now. So that's why, like, you know, you're looking at macro, you're looking at seasonality, and if macro is doing fine, then I don't have to worry about it, and seasonality will take hold. If macro is not doing fine, seasonality may do different things, and that's the kind of mentality I'm taking with supply and demand for New York City markets over this summer. If I'm a buyer, I can't say this enough. Right, all eyes on the markets right now because your opportunity is probably coming up. Let's move on to Manhattan pending sales 40,798. Show me that chart.
Yeah, and no, you hit the nail exactly on the head when you talked about seasonality, and that's what we're seeing here. So if seasonality is kind of back in play, so Memorial Day weekend really is what we're looking at, what's coming ahead of us, and that's usually sort of the kickstarting of the summer season, and we're seeing that in demand. It's really not been increasing; it's been flatlining for the last several weeks, and it's another week of a negative 0.2% drop. So pending sales are sort of going sideways, and if we're looking forward, I expect them to start drifting down from this point.
Okay, so we got supply that's inching up. We got pending sales that's going sideways, if not slightly down. And we got a market pulse, which is trending just a little bit lower. Let's not forget that this market pulse was at 0.91 or so, I believe it was, back in very early in the year when we issued that sell side call. I think it was in the 80s when we went sell side call in February. This has just been drifting lower. And, for reference, we reached 0.17 at the lows of the COVID pandemic when this flashed a buy signal back in fall 2020. So if I'm a buyer, you want to have a mental recollection of where this is moving to, right? If we're at 0.74 now and in the summer, we're at 0.6 something. I mean, you want to have an idea of how much this market, the supply and demand dynamics are favoring you to get an idea of what kind of negotiability and leverage. So we got to keep a good eye on that. Is it going to crash? Is it just going to slowly correct and then come back up? These are the questions we need to ask. Let's move on to the weeklies, Johnny. I'm looking at 1 week supply in Manhattan, 372, holiday ridden. Show me that chart.
Yeah, so that's down 24% for the week before. But again, I mean, yes, it's holiday. But let's not focus on the holiday so much as let's just focus on the overall picture of what that new listings chart looks like. And you can see that 2022 new listings really tracked last year's listings as well. The difference, Noah, as we're going to see in weekly contract signs, is that around this time, we started to see weekly contract signs last year start taking off, accelerating, as we saw supply start drifting down for the summer. Now we're seeing that supply around the same levels, but we're seeing that contract sign level, and we're going to see in a second start drifting down lower. So, last year contract signs were up around this time. This year we're going down. So it's going to be an interesting few weeks heading into the summer.
Yeah, exactly. We're normalizing right now. And 2021 is going to be one of those record activity years. We're probably not going to see that again. I mean, that was just one of those crazy things. And we were correcting, and here we are normalizing. Let's move on to contract sign. We love contract sign, measure of demand. That is also falling. Holiday, keep an eye on that. 262. John, show me that chart.
Right, so it's down 7% from last week at 262. It's not over 300, but it's still a respectable number. It's higher than it was in 2019, which, it's a good number. I mean, Manhattan is still doing good deal volume. It's just not at that level as it was last year. And I think that's the difference. And I think that's what people are going to start feeling as we get into summer.
Yeah, and I want to look at that. Let's just change this to 1 month really quick, John. You can see this is what I'm looking at. I'm looking at the 1 month. What direction is that going in? That's starting to go down. I mean, last year around this time, we were 1700, something like that. So this year is definitely not as feverish, and the urgency is totally different. But more importantly, the future, these are imperfect pricing mechanisms, these real estate markets and stock markets, and they're taking into account all this information. And when you look ahead right now versus a year ago, it's just different when you look ahead. And this is a good pivot to this chart right over here, John. Let's take a look at the colorful contract sign, because I'm wondering, is a shift beginning? We've been talking about this over and over. We think, for those viewers, we think we're in a shift now. We think the shift has begun, and we're watching deal volume. And this is what you were saying before, Johnny. Take a look at last year right? This is what we did last year, and this is what we're doing this year. And more importantly, that trend right now. Now, a couple days light in May, but that's probably 95% full. So it'll go up a little bit, but you can see it's still down.
Yeah, look, deal volume is up compared to historically. It's doing well, but the problem is we don't necessarily compare on a long enough timeline. Our memories are rather recent, so we're comparing it to where we were doing last year, and last year was absolutely gangbusters. So the slowdown from last year feels, I mean, you can feel it, it's visceral, but then you add in that normal summer slowdown, and it's going to feel really tough for sellers out there.
Yeah, and I think that's the overriding thesis right now. Right, for the last couple of months, we've been saying sell side market, get your sellers on the market, get those contracts signed, lower that price, find the market. This is a gift in terms of liquidity. This is a gift in terms of liquidity, and what I'm looking for is how far does this go down? That's really, because I mean, we're probably not going to have a huge bump going into summer, and with all the volatility going on, where do we go down to? That's what I'm focusing on. When we go down, how far? Buyers, that's your buy signal. Again, I'm telling you, this market, okay, I think is still in the early stages of a secular bull run. We had a wonderful recovery in terms of price action and transaction volume. Nothing lasts forever. A little corrective force on this is going to be nothing but healthy. The question is, are you starting a long-term trend down? I don't see it for this market for reasons we discussed. I'm not going to get into it now. So if I'm a buyer, I'm all eyes on deck. Okay.
Yeah, I would agree with that.
John Walkup, thank you so much for pulling up all this data. It helps everyone in the industry. We love you. I am Noah Rosenblatt. We are both from UrbanDigs. If you guys got questions, we got answers. Please visit our forum right over here. If you guys want to see any of the charts that we did today, it'll be in our research section right over here. Other than that, this has been your weekly Manhattan market update. Have a happy holiday, and we'll catch you next time.